When it comes to finding dividend stocks, in today's environment, you're really looking to maximize profit while minimizing your risk. And in today's video, we're going to be looking at 7 dividend stocks to invest for really a lifetime of income. So let's go ahead and break this list down. When we get into dividend stocks that you can hold for your life, the first one we look at is Verizon, which of course ticker symbol is VZ. Now this one has a forward dividend yield of 6.41%, which is pretty significant, almost 6.5%. Now, even though there was a net loss of around 158,000 postpaid phones in Q1 of 2024, so a little bit of a loss, they are still up more than 100,000 new users year over year, which is kind of crazy to think. 5% year over year lift in postpaid phones is really driving the dividend growth. Now, of course, remember with dividends that if the company is not profitable, a lot of the times the first thing they will cut is dividends, meaning they're not going to be giving back as much to shareholders if the company is not profitable. Now, of course, when you start looking at customer acquisition, which is a really strong strategy that Verizon does possess, they have a postpaid phone churn rate of about a 0.83, which of course is a very high customer retention when it comes to this market. And of course, they do have fixed wireless access, or UA, is a really big part in the growth market. The firm recorded 354,000 new additions in Q1 of 2024, which is kind of crazy. 151,000 of those coming from the business segment, making it an overall 389,000 new broadband users were added. So that is massive. Verizon has really been going out there and trying to capture a lot of the broadband users, and a lot, of course, competing with Xfinity, competing with Comcast, and of course, they have a bunch of different markets that they're going in. Finally, with over 11 million broadband consumers, which of course is going to be very reliant on Verizon's growth, making it a very strong buy when it comes to the dividends. Now, the second one we look at, very similar, AT&T, which the ticker symbol of this is T, just the letter T. Forward dividend on this one is 6.05, so you're still getting over a 6% yield when it comes to dividends. Now, of course, solid boost in high value customers that AT&T does possess in both the internet and the cellular segment is really the core advantage. With 349,000 additions in Q1 of 24, that is a really boost in prepaid phones or postpaid phones, which means you've seen a lot of people that were at Verizon. Some of those left, they went to AT&T. And of course, when you start looking at these two together, they're making up a bulk of the communication networks, which is kind of crazy because when you look at this one, they have a post-plan phone users of 1.5 million annually, giving them almost 72 million users. That is right, kind of crazy. And of course, when you look at these subscribers, when you look at the support, they start breaking it into margin. The company has added fiber optics to 27 million residents and commercial premises, so they are growing ton, which brings it over 2.4 million year over year increase of the new subscribers, which again is kind of crazy to think. And of course, the number of fiber subscribers increased around 1.1 million, bringing it to almost 9 million subscribers, which means they're going to be generating monthly revenue, giving it back to a lot of the shareholders as those dividends. And of course, the growth is very steady, and the company is very reliant on the dividends that they're paying. Number 3, we look at Comcast. Now, the ticker symbol in this is CMCSA. Now, it has a forward dividend yield of 3.13%. Now, of course, despite there being some subscriber loss, Comcast has increased the revenue over 4% in the first quarter. So pretty good, significant growth in there. And of course, the broadband revenue has grown almost $6.5 billion, which is kind of crazy. And they're continuing to add. Now, Comcast has over 32 million subscribers and internet consumption has doubled over the last year. A lot of people are working from home. A lot of households are using a lot more internet. And of course, if you're like me with a Wi-Fi life, everything runs on Wi-Fi from my TVs to my tablets to the phones, which means the data usage is going up a lot. Now, of course, 70% of residential customers are saying that they use and prefer Comcast and Xfinity over other ones because of the service they provide, which means a very high retention rate when it comes to customers, which is very important. Now, of course, despite some of the challenges that they faced, they have a current account of over 40% of the footprint, which is kind of crazy that they have that much of a reach. And of course, looking at some of the speeds that they have, some of the network, and it is poised for long-term growth because of this. They are really embedded throughout the United States. Now, looking at number 4, it is a Gilead Sciences, GILD. Now, this one a little bit different, forward dividend yield of 4.81. Now, this is really the company's development potential is supported by fundamental strength, which include capital market deployment and financial disciplines. For second quarter, the business derived a 2% year-over-year drop in selling, general and administrative expenses. So they are looking to cut expenses to make the company very, very profitable. Now, the sharp focus is on the cost cutting and, of course, improving the capacity of the workflow that they have. Now, of course, another vital part of this is the capital allocation. And again, just going through this with MSN.com, shareholders really back through dividends and a share repurchase. They have returned almost $1.4 billion to stockholders in the first quarter. That is right. That is kind of crazy when you think of how much they have in here. And of course, they are significantly profitable in 2024 that we've seen. Now, they are estimated to do almost $26.2 billion, which will indicate a 6% year-over-year increase from just the firm's basic business that they have. And they anticipate total product sales to be around, again, $28 billion within that range, $27 to $28 billion. So definitely seeing a lot of growth out of this company, and of course, giving back to their shareholders. Next one we look at on this list is British American Tobacco, BTI. Now, of course, this one has a forward dividend yield of 9.53. That's right, guys. You are earning almost a 10% dividend yield from this tobacco company. And of course, this is a high dividend and definitely super high on this list to buy. Double-digit revenue growth, very solid in Africa, the Middle East, Eastern European, Asian, Pacifica, Middle East, Africa. When you think of kind of the European market and the African market, seems like they are covering a lot of it as well as the Middle Eastern. And of course, when we think of tobacco companies, they do not only produce tobacco. They have premium categories such as Newport, soft packs, an increased volume share of almost 0.4, and a premium share of 60 bases. Now, of course, they do have Lucky Strikes. If you've ever heard of some of the cigarette brands, they quickly rise in British American Tobacco's market really execution. Product has reached 4% national volume in less than 3 years, which is kind of crazy. And the company has also introduced a ton of tobacco-free consumables, which is now in the product lineup, with the volume looking from 33 to 39% of the lineup itself. And then, of course, there is tremendous growth in a couple different areas with not only product innovation, but also with worldwide expansion. And of course, looking at developing countries like Kenya, Pakistan are some of the ones that they have having and really developing in those countries to get their products in there. Next one we look at in this list is Realty Income, which is O. We know this one. We've studied this one before. We've actually seen it. Realty Income, which again is the ticker symbol O, has a 5.79 projected dividend yield at the end of the first quarter of 2024. The portfolio was super strong, highest occupancy rate of 98.6%, which is incredible. So when you think of the realty, the real estate essentially that they own, almost 99% of it is occupied, which means they have tenants in two places and the tenants are paying rent, with over 15,000 clients from 7 European nations. And of course, they are in all 50 states within the United States, which is kind of crazy. Now, tenants on the credit watch list account for 5.2% of the annualized rent. And again, when you think of a company, if you can't afford to purchase a home yourself and you still want to live in a single family home, this could be an option. We've seen this with Fundrise. We've seen it with a couple companies that are really buying a lot more of the residential houses to afford and to make them a lot more affordable, honestly, and also just have that set income that investors are looking for. Now, every customer pays at most 1% of yearly rent for the whole portfolio. And of course, there isn't much turnover and much volatility within here. There could be a little bit when it comes to commercial real estate, but on the residential side, it is doing very well. Now, the fund has the expansion plans to really turning into debt versus or the stock market. So you can go ahead and rely on Realty Income to really produce income in the future. And I know they have for a lot of companies and a lot of years. Now, of course, Pfizer is going to be on this list, which is PFE. Now, the forward dividend yield of Pfizer is 5.71%. And of course, the operational revenue has risen 11% since some of the drugs that have been really excluded from there, they're still doing well. When you start putting those in, it looks like it's about a 19%, which is kind of crazy. And of course, when you think of a company as large as Pfizer, there is an adjusted gross margin of about 5.3 to 79%, which is insane. That is a massive adjusted gross margin increase, again, by 5 to 80%, depending on what it is kind of in the main product lineup. And of course, we know it was the COVID vaccine, not as prevalent anymore, but they still have a lot of things. Now, despite incurring loss required for the Segan company, Pfizer exhibits rigorous cost controls, which of course they do. By the end of 2024, Pfizer expects to have saved $4 billion in cost cutting strategies, which of course can make the company very operational efficient because they are not spending over the stars when it comes to cost. So guys, overall, that is 7 dividend stocks to invest in for a lifetime of income, which is kind of crazy, but I love looking at the dividend stocks and seeing kind of the portfolio and what they do possess in here. So, all right, so that is going to do it for today's video. Let me know in the comments what you guys think. And as always, thank you guys for watching.